Hi, this is Norse. This is the weekly watch list. We'll start with the crude oil. This is the daily chart of oil. Now looking at a third touch of this trend line right here. Just let me make it yellow so we can know the difference between the lines. So we have a small overreaction at the third touch itself. This trend line, in my eyes, is now confirmed. I'm now looking for a stage 2 buy on this trade. And here we go. So we have a hammering candle right here. We have a very nice close, and we are now approaching this line here. That's the 618. The feed on your end might be different than mine, but the 618 of this move itself, that's the same on anyone, because my 618 comes in at 47.88, but your price feed might be different, but the 618 regardless is the same. I'm looking to buy. I'm keeping my risk below the current swing low. I'm looking to take partial profit at the 127 Fibonacci extension. So what I'm doing is just inverting the Fibonacci retracement tool, and I have extension placed on the retracement tool itself. 127 comes in right here, and we have some decent structure there as well, previous price history. And the next target is the 1618 Fibonacci extension, comes in right there. In terms of risk versus reward, target 1 is not very good. You can see right here we have almost a 2-to-1 up to the target 1. If you play only target 2, roll to break even, and just hold for the extended target, you have a 2.7-to-1 risk versus reward on this trade. So now let's go over to dollar yen. I have been covering this pair for the last few weeks. We still have this open gap. We have this confirmed trend line right here. I expected a move up to confirm the parallel itself. Price has now touched 2 times, and let's go down to the 1-hour chart. You can see right here the open gap, very visible gap itself. It's only 30 pips, but this still is price inefficiency in the world's most liquid and efficient market. So we also have something that is called bearish divergence. So when price is printing higher highs, the momentum indicators should print higher highs themselves. As you can see right here, high, higher high. You can see the both here. But now we have divergence, so the indicators is not responding as price does. So we have a double top, we have bearish divergence, we have the parallel projection now being confirmed. I'm now looking for a potential retest of the trend line itself. If I see rejection at this trend line, I'll add a short to my position, then target the full gap itself. The confirmation on this play is when I see, or if I see a break of the last support right here, that will be the confirmation on this pair. Then I would look to just sell aggressively on any rally in this pair. If we start to break down like this, so if we have like this, if this happens, I'll then take my fibs on a leg like this, do the 618, compound my trade, like add to my trade, build a bigger position, then target lower. I will be more aggressively when it comes to rolling to break even. on the compounding entries just to not expose myself anymore. So, but all that depends on if this holds as resistance as of now. Over to the silver, we have a trend line from December of 2015. We now have, you can call this the third touch, or technically it is the fourth touch itself. What I'm now waiting for is, I want to buy this pair or buy this instrument, but the only trigger for me to buy is if we break the high from Friday close above, then I will hunt a long on a potential retest of this trend line. In terms of targets, I will look for price action at the 618 of the recent bearish leg and look to take some profit off right here at 17.70. But I think this instrument is due a major rally. That's just my personal opinion. So I will look to hold at least a portion of my trade going forward on this. We also can see price moving into a trend line like this. So that's my plan on silver. No position yet, but if we start to break higher from the current levels, since we have structure support, so this entire consolidation is where price is resting at the moment. So that's my plan going forward. Wait until the market tips their hand and then buy the first dip and just try to compound going higher. Euro AUD, I have been covering this pair a lot. We have price spiking above the election high, printing a very nice shooting star candlestick. Very nice doji indeed. Now I'm just waiting for a daily close. But if we go down to the 1 hour time frame, as you saw in the video, I expected this high to get rated. On one of my feeds, this actually got rated, but now on TradingView we have a double top. So this right here is the double top, and so we know that stops are resting above this area. If we do some fibs, so do some fibs right here, we have the 79% retracement coming in at the election high itself. That's resting just a few pips above the election spike. No, right, just a few pips above this double top. So I would not be surprised if price were to break above, take out this high, and then I would look to sell as a speculation, stage 2. And then if we start to break lower, I will just do the same thing as I'm planning on crude and the dollar yen, just to compound. And my overall target is the gap fill itself. This gap is rather large. We have 90 pips of open gap, and in my opinion at least, this gap will not stay unfilled for another 2 weeks. So that's just my gut feeling, and I'm prepared to act on my analysis. Last one up is NZD Swiss. We still haven't had a retest of this lower channel trend line. The setup is still the same. We have now a lower low as well. The downtrend is very much established. 618 lining, or the 618 to 70% is lining up very well with the trend line itself. My EA is still set to sell this trend line. I have an alert as well, so I can use both of my accounts to get in on this trade, because I think the setup is very, very, very nice. And for targets for this, as you probably know, you can use the harmonic target from the channel itself. So when a retest happens, just clone the inside of this channel, use that as the target for this trade. That lines up very well with previous support down here. And let's see if we can get some Fibonacci confluence as well. I think this is like a 38.2 or 50. Let's see. Almost a 50% retracement. So this target is very much a very achievable target for this pair. So if the retest holds, this is a extremely high probability trade just on its own. So keep an eye out on NZD Swiss and Euro AUD in the dollar yen. Those three pairs are my favorite pairs at the moment. If silver starts to break higher, I will be on high alert on that pair as well. So until next time, I wish you good luck, good trading, and I'll see you soon.